Welcome everyone to Antler's first demo day here out of Berlin. My name is Christoph and I'm here today with my fellow partner Alan to set the stage for our newest portfolio additions.
For those of you who are seeing an Antler demo day for the first time, we're a global early stage VC, enabling and investing into disruptive early stage technology companies. To date, we have invested into more than 320 companies around the globe and work with experienced founders across a broad range of sectors, typically joining them as their first investor.
We've launched investment operations here about 6 months ago, during a time that could not have been more exciting and at the same time more challenging. On the one hand, we've seen more than a dozen new unicorns come to life in 2021 alone, here in DACH. But also, we've seen a global pandemic disrupt almost every market and impact all of our lives. And that's the very point in time where we launched our first founder cohort here. So what you're seeing today is actually a recording we did a couple of days ago. Yet, as you're seeing that, we're live and an in-person event, which is actually the first in-person event we're doing here in Berlin since we launched.
At Antler, we work with companies from the earliest possible stage. At this early stage, it is all about the founder talent, which is why we spend so much time identifying the best founders to join us. During this particular cohort, we reviewed almost 1,500 applications and spent hundreds of hours interviewing to end up handpicking 60 founders who joined us here in Berlin at the beginning of April. After then 3 intense months during which we were working closely with these 60 founders as they were forming their first strong teams, validating their business ideas and building early traction, we ended up making investments into 8 emerging companies. Their founders then spent the last month almost day and night building out their first products, acquiring customers, building out their fast-growing teams, or embarking on early fundraising.
And today now is the big day where those 8 portfolio companies are going up to stage here for the first time. They're coming out of stealth mode, and I personally couldn't be more proud to be here with them. They're working on very, very exciting challenges across educational tech, Fintech, as well as health tech and marketplaces. But why don't we hand it over to our colleague Sarah to tell us a little bit more about the portfolio.
What if fans and followers of creators could invest into those they follow? The next team, Rise, has developed a social token platform to discover, meet and invest in creators and exceptional people. With Vicas's global experience of leading a company of over 600 people and managing a multi-billion-dollar P&L, paired with Rebecca's operational and design experience, together they are a strong team in building a platform for creators and their communities.
I spent many years working in the travel industry, and I had the privilege to travel the world and meet some of the most celebrated, talented, and creative people out there. And I learned that it is the people who create value in this world. I also learned that 60% of the working population are unhappy at work. Creative freedom is one of the biggest reasons for that. What if people are empowered to live creatively and do their best work? What if we could enable investing in people and build a community that is vested in the success of people that truly unlocks their creative potential? Passion economy, which is earning by doing what you love, is truly the future of work. Being a streamer, a content creator, an entrepreneur, a gamer, or a podcast host are becoming popular career choices. In fact, 29% of American graduates want to be creators, which is a seismic shift compared to how we've looked at work in the past. COVID turbocharged the growth and engagement on social media platforms by 50%. With more creator tools, as barrier to become a creator has fallen dramatically, the size of the creator economy has inflated to 150 billion and experiencing a double-digit growth. There's another big trend. Crypto adoption is growing faster than the internet. In fact, faster than any technology in the history of mankind. There'll be 1 billion crypto users by 2024 as per World Bank. Now, combining the growth and engagement on social media and enablement of crypto peer-to-peer payments is a perfect storm to drive future growth. So, the problem that we're trying to solve is that 90% of creators do not make money by doing what they love. While crypto is growing at a monumental rate, it is complex to understand, and like early days of internet, user experience still needs to come a long way. I mean, we're all used to forgetting our password and recovering it in a matter of seconds. But if you lose your private key or seed phrase, you lose your money. If we want to onboard the next 100 million people into crypto, we got to make this easier. That is why we're building Rise, a blockchain network that enables creators to build their independent economies by launching their personal cryptocurrencies as creator coins. We've been working with creators ground up to build a product that enables creators, a group of creators, or a brand to launch in 3 simple steps. No technology experience needed, with an easy-to-mint coin feature. Creators could fundraise through these creator coins from their fans and even reward their fans for the right engagement, and fans could tip their favorite creators as a thank you. Creators could also unlock direct access as private and group chats and create revenue streams as unique collectibles such as content and digital art as NFTs, brand deals, merch, or even a masterclass. Let's talk a little bit more about creator coins, which are also known as social tokens. They're backed by Rise token, which is network's liquidity token and carries real monetary value. Economics of these coins are fixed supply and linear price curve, which basically means creator coins value appreciates with growing demand of these coins. We aim to build real utility to these coins, and hence creators and fans are incentivized based on community participations as rewards. Let's look at some use cases of this social money. Meet Anya, a highly celebrated and a world-class musician. Here she is playing with Chris Botti, a Grammy Award jazz artist with a famous composition with Sting, Michael Bublé, to name a few. With Anya coins, Anya intends to enable private access for her fans. You could buy or trade her coins for original handwritten notes. You can have voting rights on fusion with world-renowned artists from her network as a live stream, personalized birthday or wedding compositions as NFTs, and even a masterclass from her. As Anya also runs a business, you could get her insights on economics of organizing music festivals with the trade of her coins. This is my fan moment to introduce Junkie Cat, who is well known in the electronic music scene and has unlocked access through his coins for a private chat, early bird ticket access before it goes live on any digital channels, voting and recommendation on the next venue, as they're always unique, and Junkie Cat merch, which is actually quite desired by his fans, and a masterclass in electronic music. Nina is famous for her iconic, uniquely stylish and cartoonish illustrations. Her work has been showcased on major billboards across Netherlands, and her work appears in Dutch media regularly. Art that you see on the slides are possibly the first NFTs on Rise, so keep an eye and grab them before they're gone. And like Anya, Junkie Cat, and Nina, we have many unique stories. So far, we've been working with hand-picked 20 creators to build use cases and refine our product in alpha setting. Excitingly, we're also working with wider creator ecosystem platforms providing productivity tools, mental health tools, and micro-communities forging partnerships as a no-code creator API. That would enable creators to mint their coins super easy. Our business model is that we take a fees on creator coin transactions as a provision to provide liquidity to these coins. We'll also be earning yields by staking our tokens in the network. And as we explore the frontier of crypto and its real-world use cases, we will have more opportunities in future as well. One of the things we're passionately trying to do is to make the user experience really, really simple. And that's why we wish to have credit and debit card enablement to buy creator coins and easily convert them to crypto and back to fiat money. And we're working very hard to do the magic in backend to reduce barrier to entry of a non-crypto native to come and participate in the creator economy. We'll also have a path to be fully decentralized in the future, where the community will largely own the network. To build this unique and forward-looking product, we are assembling a dream team to make it happen. As a team, we are passionate about helping people to do what they love and to make crypto easy to unleash its possibilities as a decentralized network. I come with a marketplace experience of leading Booking.com's Asia business and a Harvard Business School alumni, and I'm building Rise with Rebecca, co-founder and COO, who has a strong operations and process design background working in large technology firms. Federico is the creator in the team, driving our community participation and creator relationships. Luca is our economist and a crypto native who has the experience of tokenizing companies in the past and helping us design our token economy. And we're working with developers in the Web3 ecosystem and to build out this unique product. Together, we believe we are adding a new dimension to the creator economy with direct relationship and access to fans and their communities, and empower creators to build an economy centered around them and not the platforms. Rise aims to make crypto easy and to put the power back in the hands of creators and their communities. Thank you for listening, and please reach out for any questions.
So thanks both for introducing Rise today. Sounds very exciting. You've spoken a little bit about the complexity of building blockchain products. Can you maybe share how that informed your decision on your product roadmap?
Yes, sure. So the main goal for us is to create a super user-friendly product. That is not so easy if you're building in Web3, which is the term for blockchain and cryptocurrency. I don't know if you have a cryptocurrency wallet, but if you are transacting in Web3, you need to take care of security measures. You have to have a crypto wallet, and you can never ever forget your seed phrase, the private key that Vikas mentioned. We don't want any of that for our users, so we want to onboard the next wave of mainstream users into crypto, and for that we need a forget password function. So one of our main goals is to enable a way to transact with coins where all you need is a credit card to buy this coin. That has some regulatory and development challenges, so that's why we're working with a Fintech partner who has the necessary tech and the necessary licensing to actually go to market with that. And on the other hand, we're working with a lot of blockchain startups to make the transaction super simple and reduce gas fees, the Web3 transaction fees. The flip side of building in Web3 is that everything's open source, so that's a great perk, and we're leveraging that for our project as well. Right now we're in closed alpha, which we need to do a proof of concept, but we will do an open beta launch beginning of next year where we can actually go to market in a compliant fashion.
Okay, and you mentioned that you're looking for kind of a next wave of mainstream crypto users. What does the go-to-market look like to get them onto Rise?
Our creators actually resonate with the proposition that we have of building a decentralized and independent ecosystem for them. They just don't know about us yet. So we're going to use our creator relationships and leverage on their outreach to actually spread the word. We're also allocating a small token fund to be distributed to these creators who have the outreach in their genres to communicate with their fans and invite their community and their fans onto their economy. NFTs and crypto are becoming really popular amongst creators as a tool to monetize. And what we're trying to do also is to build education conversations on Clubhouse or on our private Discord channel and continuously talk about these use cases, but also possibilities of blockchain and NFTs for creators. And one of the other things that we're trying to do also is to forge partnerships with creator ecosystem platforms. Working in mental health for creators, productivity tools for creators, and just leverage on that creator ecosystem and build together as a community. So I think one of the things that we want to do is to have a no-code API solution with these platforms, which kind of makes it really easy for creators to kind of onboard onto this creator coin economy.
And I think nobody would argue that NFTs and social tokens are a pretty hot topic right now, but why did you decide to build Rise based on blockchain?
Excellent question. I'm glad you asked. We get this a lot actually. So if you think about traditional goods and services and monetizing those as a creator, you could just as well do that with a Stripe checkout and using fiat currency, which is your US dollars and euros of the world. But there's a side with the coin holder benefits and the reward system that you cannot build unless you have the possibilities of a cryptocurrency. So this two-way transaction where you pay for access or ownership of a piece of content, and return you get coins which have a utilitarian value, that cannot be mimicked without a cryptocurrency. And it's a very elegant system to enable this two-way transaction between a creator and a fan. So there's a creator value prop, but there's also a very strong fan value prop, because you receive something that you can then use on this platform or even outside of the platform, because it is something that holds real monetary value. And that's the answer to the question why Rise is a cryptocurrency platform.
Thanks, Rebecca. Thanks, Vikas.
Thanks, Christoph.
The pandemic has accelerated a mega trend, and the number of people seeking out mental health support has really skyrocketed. Claire and Me is a personal therapist that calls you daily to give you support in everyday life. Emilia, with a background in psychology and strategy consulting, matched with Selina's background in business at Google, the pair are building Claire and Me, the next generation's personal therapist.
Hi, we are Selina and Emilia from Claire and Me, and we're democratizing mental health by building the first AI-powered therapy phone bot. Most of you can relate to us standing on the stage right now. Most of you know what that feels like. And 1 out of 10 of you might also know what it feels like to experience symptoms of anxiety in everyday-like situations. Breathing heavily when walking into a supermarket, worrying excessively or thinking in circles when about to answer a really important work email, or lying in bed, not being able to sleep due to restlessness and a racing heart. 550 million people around the globe experience these symptoms on a regular basis. The number of people with symptoms is growing, with the pandemic further accelerating this, and demand for psychiatric solutions is also rising. But the number of human therapists able to help these people isn't growing at the same speed. Human capital cannot keep up. It shows the system has an error. Human capital is limited, and treatment is focusing too little on people experiencing early or minor symptoms. We need to rethink support for people, because without innovation and change, a mental health crisis will arise. We need a solution. We need Claire. Claire is an AI-powered therapy bot. Claire is a virtual supporter that calls you on a daily basis. Personalized to your needs, Claire is interactive and proactive via phone, so Claire calls you. With Claire, we simulate dialogues based on cognitive behavioral therapy in order to start a new era of mental support. A couple of years ago, this would not have been possible, but tech has advanced. Now, NLP algorithms are becoming more reliable. Deepfakes are no longer something out of a sci-fi film, and open sources are making it possible for tech to become more human and to support our vision. With demand growing and stigma decreasing, today's timing is paving the way for more digital solutions. Let's get back to Claire. In the first interaction, users sign up and are guided through an onboarding and diagnosis in order for us to understand the user's needs. Users can personalize Claire with different human voices, following the assumption that creating a connection to the therapist is one of the core elements of therapy. Users can add different modules, and users can also track their mood. With Claire, people can now get the support they need anywhere and at any time, with no stigma, low barriers, and at an affordable price. But most of all, not only reactive, but proactive, because users tell us when they want to be called, and Claire will call them. I'm sure you're all now wondering what that sounds like, so let's hear a call from Claire so you can understand our vision better. And remember, even though Claire has currently my voice, it's the machine talking.
Hey Claire.
Hey Selina, thank you for picking up again. Is now a good time for you?
Yes, now's a good time.
How are you feeling today?
I'm good.
Okay, so I hear that you're feeling good. But good is the most frequent answer people give me. How are you really feeling?
Now that you say this, I actually am really tired. The past week has been a lot.
It's okay to feel tired sometimes. It's still great that you're taking the time to talk to me right now. I would suggest to just do an easy reflection for today. Is that all right for you?
Yeah, I think that's a good idea.
Have you been reflecting on the topic of going into autopilot that we previously discussed? Did you manage to put in the tools we learned to be present? Tell me how that was for you and which tools you used.
To be honest, it was pretty hard in the beginning, but then I tried the meditation that you'd recommended, and that actually really helped.
It's good to hear that your first meditation session went so well. Next time we talk, when you have the chance to get some rest, I suggest we look at your belief system and different beliefs that we have. Thank you for talking to me. I hope you get some rest today. Take care.
Bye.
As you can see, Claire can already speak, hear, respond, and store what the user is saying. In the meantime, the user is building a relationship with Claire, learning how to help themselves via individualized coaching and transferring the content into their daily life. But we won't stop there. Our vision is far greater. Soon, Claire will also be able to move from passive to active. Claire will converse, remember, and understand what the user is saying. We will expand the experience to more languages, different symptoms, and additional therapy types. Calls like the one you just heard a couple of minutes ago are what our 160 test users received on a daily basis for a duration of up to 9 weeks, out of which 90 people still receive daily phone calls. This is based on a closed MVP test. Our active users are giving Claire a Net Promoter Score of 9.2 out of 10. We have 50 waitlisted users who are waiting for us to launch an English version. Our users have talked to Claire for over 3,000 minutes. We have 1,200 different conversation outcomes, so our users really feel heard. Our first adopters are already seeing improvements. We have one user who had a symptom reduction from 20 to 5, with 21 being the maximum score over using our product for 6 weeks. Another user had a symptom reduction of almost 40%. We plan to turn this observation into a study in collaboration with a research institute next year. We're launching the app into the wellness market with a D2C subscription focus, exploring the potential as a medical product as soon as we've done the mentioned effectiveness studies. We're disrupting the market with an audio-first tech solution. At first glance, the space might seem crowded, but nobody's focusing on the synergy of individualization and clinical effectiveness. We're differentiating from players like Selfie and Bloom by highly individualizing the journey for our users with the help of AI. We see chatbots like Woobot and Wyza as our main competitors who we're differentiating from by delivering a human voice experience. Emilia and I are the perfect synergy of business and psychology with a passion for design and tech. Everything from the vision to building and launching the first MVP, we've done the two of us. We've then been joined by Josh, who is now driving the tech vision forward. We've also expanded the team on the product and psychology side and are happy to have our team join us on this mission. In the past couple of months, we've developed an idea into a product, acquired our first users, and received great feedback. We now want to strengthen the first signs of product market fit, build the native app, and launch our beta version. You can help us build the first AI-powered therapy bot and launch a new era of therapy. Feel free to try Claire by scanning the QR code. We have a special call for you today with an easier onboarding so you can all experience what it's like talking to Claire. So let's call Claire and get therapy.
So thanks both for introducing us to Claire today. Can you maybe share why Claire works and also some of the feedback that you're getting from users?
So about why Claire works, our approach is scientifically and economically proven. We're using self-help, which is a growing tool. Bite-sized content is also proven and works. And audio is not only a growing trend, but it has also previously been used in cognitive behavioral therapy. And about what the users are saying, we're talking to about 5 users a week. We get amazing feedback, and what we really see is that personification works. So Selina and I actually didn't talk about Claire as a third person, but the users started doing that. So saying things like, Claire said something really funny yesterday, or she really understood what I said, or I missed a call from her, so I called her back. And that really shows us that it's adding the human component. And what we also see is that people and groups that normally don't really open up in therapy or like hold their heads low in therapy, they really like talking to Claire, because talking to a bot, a non-human, is judgment-free. So that also shows us that it's working.
Okay. And what did you, when you guys think about kind of the first days, what did you guys decide to build Claire?
So Selina and I are really mission-driven people. Selina grew up with a mom who became a therapist when Selina was a teenager. So she basically studied psychology passively, whilst I studied psychology actively. And we are deeply rooted in the mental health topic. We've always wanted to create an innovation that actually positively impacts a lot of people.
And we've already managed to inspire an amazing team to join us on our mission. Josh, who is a second-time founder, joined our founding team and is driving our tech vision forward. And then Lea, for example, she's a psychotherapist in training. And Shlomi, he's not only a product manager, but also a voice engineer.
Okay, so in essence what you're doing is you're building technology that is not supposed to feel like technology, but that's supposed to feel very, very human. Is that actually feasible?
So just to make sure this became 100% clear, even though it was Amelia's voice in the demo, it wasn't actually her speaking. So we could call Claire right now and get a similar experience, but we want to make sure that everyone does this at home in their own time. So this is why we provided you with the QR codes. But to talk a little bit about the tech without going too much into detail, all of the calls, the one we heard, and all the other calls are scripted, and the voice snippets are pre-recorded. So we have AI come in certain parts of the conversation to really individualize the call, like saying your name or remembering what you said the day before.
Thank you both. Looking forward to hearing from Claire on that.
The next team is paving the way for traditional investors to invest in the future of high-growth software companies. Tapline accelerates the growth of SaaS companies by providing them access to frictionless capital, essentially unlocking the financial value of their subscriptions. Dean and Peter bring a combined 20+ years of experience in the financial services industry. They are joined by Dimitri, who was previously CTO at a gaming startup and has 10 years of software engineering experience.
Hi, let me introduce you to Tapline, where we at Tapline are providing SaaS entrepreneurs access to frictionless capital. The problem that we are seeing in the market today, from an early to a late stage, is that SaaS companies require external funding to grow. However, fundraising is time-consuming, it takes management away from their day-to-day operations, and secondly, equity fundraising is dilutive. In order to solve this problem, we created Tapline. And Tapline is a two-sided platform that allows SaaS companies to trade their recurring revenue for instant cash in a non-dilutive way, while on the other side, investors purchase these recurring revenues for a period of 12 months. How does that all work? Let's start with the sell side of the platform with the SaaS companies. SaaS companies are onboarded to our platform via standard KYC. We only accept companies that have $100,000 annual recurring revenue, as well as 6 months of liquidity. Once these companies are onboarded to Tapline, Tapline via an API connects to these companies' subscription management software, accounting software, as well as bank accounts, extrapolates certain data, and via internal risk model, calculates how many subscriptions can be pledged to the platform to then be sold onto investors. Speaking of investors, investors on the other side, such as hedge funds, high net worth individuals, banks, are also onboarded via standard KYC. They can select the investment criteria in which they would like to invest, such as low, medium, or high risk subscriptions, the amount that they would like to invest in, whether $500,000 or $5 million, as well as the discount threshold that they'd like to operate in, whether it's between 5% or 9% as an example. Once these investors are onboarded to the platform, they have a view of all the subscriptions which they can bid and subsequently purchase their recurring revenues for the next 12 months. Let's stay with the investors at this moment in time. We are creating a new type of investment instrument where investors can earn between 5 to 10% per annum, even up to 12%, depending on the discount rate that is approved. And if you take this indicative return potential, it compares favorably to money market funds, fixed income funds, and other asset classes seen out in the market today. Here you see a snapshot of our product, where the SaaS client can select the subscriptions which they would like to trade. They receive their funding and can track their performance via a dashboard. One key element to point out is that the end client of these SaaS companies does not know that Tapline exists. Currently, we have 6 clients who are in live MVP testing, which would dovetail into our product launch in December 2021, later this year. Here you see a snapshot of our investment product overview. The investors can see the subscriptions which they would like to bid on. They can also track their previous investments, and they have certain metrics such as their IRR, so they can look at their return potential. And finally, on the product, here you see a snapshot of the trading overview where the investor bids, purchases, and executes the trade. But why now? We at Tapline believe in the subscriptionification of everything. There's been a fundamental cultural and demographic changes which has resulted in an immense growth in subscription-based business models. And just with the SaaS vertical alone in itself, this is expected to grow at a 19% compound annual growth rate in Europe, tipping north of 37 billion euros in 2025. So the SaaS entrepreneurs of today and tomorrow require an alternative financing source to further grow their business. On the other side is what we like to call due diligence 2.0. Due to the proliferation in use of subscription management software such as Stripe and Recurly, accounting software such as Dativ and LexOffice, as well as PSD2 and Open Banking, this has allowed for faster digital financial analysis and due diligence validations of investing in SaaS companies. In terms of the market, the SaaS global market is huge. It's over $100 billion. And we feel that in Germany alone, we can obtain $3.5 billion, which is obtainable under a subscription-based financing model. In terms of the competitive landscape, most of the revenue-based financiers are managing their investment exposures on balance sheet. However, Tapline is an EU-focused trading platform with a strong capital markets team. And we would like to onboard investors starting at high net worth individuals at $250,000, as well as large institutional clientele at $5, $10, $15, $20 million. And we feel with the different risk-reward profiles on the platform, there will be different pricing and bidding on the subscriptions. Therefore, on the sell side of the platform, the SaaS company can choose the best price to receive non-dilutive financing to further grow their business. In terms of traction, in a short space of time, we have developed our product, which is in live MVP testing. We have spoken to and due diligence over 16 SaaS companies within the European Union who absolutely love our product and the idea of Tapline. If our product was live tomorrow, we could transact 2 million euros in terms of transaction volume. And on the other side, in terms of the platform investors, we have spoken to banks, asset managers, hedge funds who really like our product as well, so much so that we have a soft commitment from a family office at 500,000 euros, as well as a current investment pipeline of 1.5 million, which is also exciting. The larger asset managers really like the risk-return profile of the one-year instrument, but once we at scale, we can contact them, and then we are looking at transaction volumes north of 20 million euros. We are on track to launch our product in December. Right now, on the product side, we currently have an MVP. We are currently integrating our SaaS modules as well as our investor modules. On the SaaS pipeline side, we would like to onboard 15 clients by December. We are currently 40% of the way there. And on the platform liquidity side, we would like to close 3 million euros to get the platform going in December. And right now, we run about 50% of the way there. In terms of our team, we have 35 years experience across countries and industries. That's 35 years deep-seated experience in capital markets, fixed income, risk management, venture capital, entrepreneurship, and technology. And with this complementary skill set, we feel we are the right team to execute on our growth model in becoming Europe's leading recurring revenue trading platform. We have key individuals that support us. Our advisors and investors cover German banking, German legal regulations, as well as experience in fintech investments in the US and Europe. And it's with this advisorship and investment early on that we have a great support base in order to aid the growth trajectory of Tapline. So thank you very much. We look forward to you joining our journey, becoming Europe's leading recurring revenue trading platform. Thank you.
Thank you for the presentation. This is super exciting. You mentioned during the presentation that you're building a new asset class for investors. Talking from an investor's point of view, how is this really new?
Sure, maybe I can take that. Traditionally, investing in technology and software companies has been the domain of venture capital companies. If you look, last year alone, European VCs invested about 50 billion in European startups. On the other side of the equation, you have over 25 trillion assets under management in Europe by large investment managers. So when you think about it, really 99% of all the investments go into very highly liquid investments that are less risky than a typical early stage. What we're trying to create here, we have a 1-year short instrument that still gives investors the exposure to the technology sector, but the exposure comes in a very structured, de-risked format. In our experience, investors love when you have predictable cash flows and we can quantify your risks within their investment criteria and framework. So at my experience at Bank of America, Merrill Lynch, whenever we were able to structure a $100 million instrument that is short and investors can quantify their risks very accurately, it becomes a food fight. Investors come in and everyone wants to invest in these types of instruments. So this is what we're trying to create for subscriptions. We want to create a multi-billion-dollar asset class that gives instant liquidity to SaaS companies vis-a-vis the large multi-trillion asset markets out there.
Thanks. You guys obviously have a ton of experience and network on the capital side. But talking a little bit about the SaaS subscription-based model side, how are you planning to ramp up that side of the marketplace?
Yeah, thanks. Firstly, we have analyzed and segmented the German SaaS market very closely. And in terms of our go-to-market strategy, we will take a lockstep approach in targeting SaaS companies starting at $100,000 ARR up to $1 million ARR. As we organically grow our sales team as well as platform investors, we would start to target SaaS companies in the ARR range of $1 million to $5 million. And this effectively is actually our sweet spot. What we are seeing right now is a lot of client interest outside of Germany. And we are actually working directly with these clients so that they can transact on our platform when we have our product launch in December. Additionally, what is another key element is that we are starting to partner with venture capital firms who are actually investing in SaaS companies. These venture capital fund managers will act as product ambassadors for Tapline. So with their investee companies raising non-dilutive capital from Tapline to further grow their business, they will naturally fetch a higher valuation round when they do the next equity round. And this economically benefits the VC fund manager, at least on a book multiple return basis. So from the VC manager side, our incentives are aligned. And finally, we'll be tapping into Antler's investee companies. Globally, with over 300 companies worldwide, there are over 25 SaaS companies in the European Union who would be supported with non-dilutive capital to further grow their business so that they become large ARR $1 million companies in the future.
So if I'm the CFO of a SaaS subscription-based model, why would I choose Tapline and such platform model as opposed to an off-balance sheet revenue-based financing model?
Yeah, sure. So we feel the platform model is more scalable. It's better pricing for the SaaS company and the cost of capital from investors is lower. We would like to onboard high net worth individuals starting at $250,000 all the way up to institutional clientele at $5, $10, $15, $20 million. With these different risk reward profiles of these investors, they will be able to bid different prices on the platform for the subscriptions of these SaaS companies. So the SaaS companies can actually choose the best price in order to raise non-dilutive capital from the platform in order to further grow their business. So effectively, our incentives are actually aligned with the SaaS company that they get the best price from our platform, therefore they will transact more on our platform, and this is where Tapline earns revenue. In terms of traditional on-balance sheet revenue-based financing, these solutions generally have higher operational and interest costs as well as losses, and effectively this is passed on to the borrowers at a higher interest rate. Also, the duration of these contracts are a lot longer. We at Tapline would like to have a standardized 1-year contract, which is hassle-free and easy to use, which compares favorably to some of the other contracts we have seen, which have longer durations and many more stipulations.
Thank you.
Thank you very much.
Thank you, Alan and Christoph. The first team today is the Power Trio, Cyrus, Robert and Timur at Whoosh. Whoosh sets out to really transform gastronomy's slow and manual payment process, essentially cutting the time to pay your bills in a restaurant from 15 minutes to 10 seconds. Cyrus, who's managed and run 2 restaurants in the past, paired with Robert and Timur's extensive strategy and operational experience, really combined the execution force focused in launching this payment solution in the market.
I've owned restaurants for the last 10 years, and I've seen firsthand the many problems that restaurant owners face. One of the biggest problems is guest payments. Now imagine yourself here in a restaurant. You just finished eating your meal and you want to pay your bill. You're looking for the waiter, but there's no one there, or if there's someone there, he's busy and not looking at you. We know it's hard to get the attention of waiters in restaurants. Finally, you get the attention of one, he comes over to you, and then you ask for your bill. After waiting for some time, he comes back to you with your bill. And depending whether you're paying in cash or credit card, you're waiting again for the credit card machine or change back. Now, what I just described is a typical problem in restaurants, and restaurants leave a lot of money on the table because of the long payment process that reduces table turnover. They have high service staff costs, and ironically, because of the pandemic, they have personal scarcity. And for the smaller restaurants that don't have negotiating power, they have high credit card transaction fees. Now, these problems that I just described for restaurants also inversely affect the guests. Guests experience long wait times to pay, difficulties splitting the bill when they eat in a group, and cumbersome paper-based receipts for the business travelers who want to keep their receipts. That's why we have come up with a solution where you pay with your phone through a QR code. In this case, it addresses the problems we just described, such as no customer wait times, save cost on fewer staff, reduce the high credit card transaction fees, and finally, you drastically improve the guest experience. So what are we really doing? We are digitalizing gastronomy's slow, manual, and high-cost payment process. Luckily, macro trends make our timing perfect. In Germany, where cash is known to be well-loved, cash payments were actually surpassed by non-cash payments in 2018, and that's even before the pandemic's impact. You can see QR codes now everywhere, from local buses to scooters to e-bikes to your local hairdresser. And QR codes are now replacing the physical menus in restaurants. And finally, COVID-19 shifted everyone's habits. Restaurants are more open than ever to survive the pandemic with new solutions. Like last year, they all had to accept delivery, otherwise they would close. So there is no better time to approach restaurant owners than now. So what is the ultimate value of Whoosh? We reduced the payment time from 15 minutes to 10 seconds. At its core, you scan the QR code that is specific to your table, it launches the web app without the need to download an app, and then we fetch the data from the POS. Next, you pay either the entire check or you split the bill. You can tip your waiter, and multiple payment options are available. So the video that I'm about to show you is how we have currently developed Whoosh. So you scan the QR code, it launches the web app, you can split the bill, choose your items, or pay for the entire check. There's a preset tip, and you can also change it to higher or lower, and then you click on pay. In this case, it's Apple Pay, which lasts literally 1 or 2 seconds. After which, the payment is done, and we inform the restaurant through the POS that it is paid. And after the transaction is finished, and you can download your receipt or create a Whoosh account if you desire so. In the future, we'll add additional functions such as dine-in ordering, marketing, data analytics, and others.
With the solution Cyrus just showed us, we're mainly addressing full-service restaurants. These are the restaurants where you order and pay at your table with the waiter. This segment represents about 42% of the overall German food and beverage service market. And once our product supports the dine-in ordering, we can also address other segments, such as self-service restaurants. Our business model is based on a transaction fee. We are charging restaurants 2.5% for each payment that is made through Whoosh. This is comparable to what restaurants are currently paying for credit card transactions. And given our higher volumes and bargaining power, it allows us to generate a good margin. We do not charge any fixed monthly fee, and there's no hardware required. This way we can onboard new restaurants fast and hassle-free. The market we are tapping into is huge. The underlying food and beverage service market is more than 410 billion euros in size and includes more than 1.5 million restaurant enterprises in Europe. In Germany alone, there's more than 150,000 enterprises. And for our product specifically, we're estimating the market at about 24 billion euros, and we also see additional opportunities in other verticals outside of the food and beverage service industry. So where do we stand now? We have just finished our MVP and are currently onboarding first test customers. We have 3 integrations with POS systems so far and are thereby covering a good share of the German market, and we have additional POS integrations in the pipeline to soon cover more than half of the German market. And lastly, we have a growing waitlist of customers, which POS systems we will soon integrate with.
We plan to onboard around 3,000 restaurants by the end of our first year, following the same process deployed by industry giants in the same vertical, combined with best practices from our strong B2B sales backgrounds. Regarding our strategy, we have separated our approach to 2 main customer types, which are independent restaurants, where we use a combination of telesales and field sales, while with medium and larger chains, we're following an account management-based approach. Luckily, there are also a handful of stellar advisors coming from the restaurant industry who will further help elevate our growth. Regarding our competitors, we have segmented them into 3 different groups. First, we have possible entrants with very limited threat due to the fact that they are pursuing other strategic priorities or are just too far away from offering payment handling as a core product, while in terms of direct competition, it mostly consists of small players with inferior products. In terms of direct competition, there's a handful of players, out of which Sunday App is the only one that is partially addressing our market. A couple of months ago, we have prototyped and validated our idea in a few restaurants. Based on the feedbacks and learnings that we have gathered on site, we have finalized and built our MVP. We're currently raising our next investment round, which is almost already fully subscribed by a combination of VCs and angels, and we will use this investment to supercharge our restaurant field sales and onboarding, as we're following an aggressive and ambitious growth strategy on this hot land grab market. We are just the team to accomplish this task. We have scaled successful businesses from scratch before. We know the everyday operations of restaurants, as we have owned and operated a few establishments for over 10 years with 60+ employees. And we also have over 15 years of hands-on operational experience, which is a key necessity for this execution-driven business. As for the tech side, our CTO Ricardo has also over 15 years of experience, including previous startup CTO roles. Thank you for your attention, and don't forget to check out our website at joinwhoosh.com.
So thanks guys for sharing what you're building at Whoosh. Really, really exciting. Can't wait to start using it in my favorite restaurants too. Can you guys maybe shed some light on why you're building Whoosh?
Sure. Well, I think we all know the situation when you're waiting ages to get the bill in a restaurant or to split it with your friends. And those are exactly the situations where we wish something like Whoosh would exist. And I think that's why we are really identifying with our solution. Then, of course, also Cyrus has seen this problem through the eyes of a restaurant owner, as he has owned 2 restaurants himself before. And his perspective really helped the team to see how we are not only improving the dining experience, but we are also supporting restaurant owners and their staff in the daily business. And we have a nice mix of backgrounds to build this. Cyrus, of course, with his restaurant experience, Timur has built successfully execution-driven businesses before, and I've built a leading vegan brand selling both to retailers and to restaurants. So we're really excited about Whoosh and can't wait to bring this everywhere.
So Robert has mentioned it, Cyrus, you've been in the shoes of the restaurant owner for a long time. How are you thinking and how would you describe the value that you bring to a restaurant?
Yeah, we see many benefits when a restaurant uses Whoosh. Firstly, we reduce the payment time from 15 minutes to 10 seconds, which means faster table turnover. More guests can be served, which means more sales. Secondly, we free up waiter capacity by 30%. Thirdly, we see waiter tips go up as much as 40%. And lastly, guests love this seamless, digital, and very quick experience, which leads to higher satisfaction and loyalty to your restaurant.
So luckily for us as restaurant guests, there's a lot of innovation in the space. How are you guys different from competition?
I mean, there are a couple of players, but none of them provide such an easy-to-use solution such as ourselves. For example, we're integrated with the POS systems in the restaurants, therefore they don't have to install or purchase any additional hardware. And on the guest side, they do not need to download any third-party app or register an account because everything happens in the web browser. Because of this, it's a much easier, much faster, and much better adoptable product that restaurants and guests will love.
Thanks for sharing that. Looking very much forward to seeing Whoosh around the city.
Picala is making algorithmic trading in the crypto space available for everyone, building on the back of a trading engine that has been developed over 4 years by CTO and neuroscience PhD Aldo. This team has been gaining traction quickly and is already managing significant sums of money from early alpha testers. JJ and Laura, who themselves are veterans in the crypto market and have backgrounds in consulting for regulated industries and marketing, complete the co-founding team.
I want to introduce you to Daniel. Daniel is a 32-year-old graphic designer living in Berlin. He's built up some savings over the past 10 years, but at the moment they're just sitting in his bank account doing nothing. So Daniel's looking to invest. He's talked to his bank, but they're not really interested in only a few €1,000s. So instead, he signed up to a robo-advisor online to help him navigate the stock market. Now Daniel's also heard about crypto, and he's heard there's really good money to be made there. A friend of Daniel's who's dabbled in crypto suggested that he open a Coinbase account, which he did. But once he was there, he didn't really know where to start. Daniel's story is a common one. And he's not wrong. There really is good money to be made in crypto. In fact, it's a €2 trillion market globally and growing year on year. And like Daniel, 64% of millennials and Gen Z are interested in investing in crypto, but only 15% have actually invested so far. That's because crypto is really difficult for the average person to get into, and it's even harder to actively trade beyond buying a few tokens and hoping they go up in value. And whilst there are dozens of robo-advisors out there to help people like Daniel cut through the complexity of the stock market, there really is no equivalent in crypto. We're here to change that. Picala is building the first crypto robo-investor platform for ordinary people who want to invest profitably in crypto without getting into the complexity. And we call ourselves a robo-investor because we actively manage our customers' funds 24/7 using our proprietary trading engine. Our vision is to open up crypto to mainstream retail investors in the same way that robo-advisors have done for the stock market, and a lot more profitably. So who are we and why are we the right people to build this? Well, Aldo is a mathematician and data scientist with a PhD in applied mathematics and neuroengineering. He's actually spent the past 4 years developing the technology behind Picala's trading engine. Laura is an experienced crypto trader who's worked as the head of marketing at a crypto exchange, and I'm a former consultant with experience in policy and crisis management across multiple highly regulated sectors, and I first bought into Bitcoin at 13 euros. Combined, we've been trading cryptos for longer than Bitcoin has actually existed, so we're intimately familiar with its highs and lows, and we're really committed to making crypto investing easier. And we've already made exciting progress as a team. In the past 4 months, we've gathered 1 million euros of assets under management from our test users, and now it's time to kick it up 100 gears. That's because crypto is already really big, and it's getting bigger. The total market cap of cryptos grows by an average of 200% per year, and the past 12 months have seen billions of euros of high-profile investments flooding into the market. And even with these growth levels, there is still massive potential. Cryptos are quickly becoming a normalized asset class for people under 40, and these age groups are about to overtake older generations as the largest holders of wealth worldwide. Based on this fast-growing market size, we believe we can realistically capture 5 billion euros of assets under management. For comparison, Scalable Capital, a stock market robo-advisor based here in Germany, has over 2 billion AUM. Nutmeg in the UK has over 4 billion, and Wealthfront in the US has over 25 billion AUM. We've worked hard to make our platform as simple as possible. Customers sign up with us and choose how to spread their funds across 3 risk strategies: low, medium, and high. Each strategy is actively managed across a different range of digital assets. Customers can track the value of their investments in real time with our fees automatically deducted, or they can just invest and forget. So what's the secret sauce behind our trading engine, or as we've named it in Aldo's honor, our secret salsa? Well, it's the unique blend of mathematics, neuroscience, and machine learning expertise that have gone into developing it. The result is a proprietary method of predicting directional trends in the market, which allows us to capitalize on volatility in our customers' favor. And we actually split our customers' funds between dozens of unique trading bots, each of which has its own trading personality based on the same underlying prediction techniques. It's actually the digital equivalent of having dozens of highly trained investment managers working together to manage your funds. This spreads the risk and allows us to win on more trades than even the best human traders can. And if you look at our performance to date, you can see why we're confident. We've already developed our high-risk strategy, which trades crypto futures using a 2x leverage. We've been testing it with real money since January, and in that time, it has significantly outperformed the major cryptocurrencies and crypto indexes. Of course, this is crypto, so you can see there are some pretty sizable peaks and troughs, but the upward trend is very clear. In fact, even with these fluctuations, the strategy has achieved 8x returns since January. And this sort of performance is not unique to 2021. We've actually backtested across multiple years of data, and our tests have shown that over the past 5 years, the high-risk strategy has achieved an average of 10x returns per year and a minimum of 4x returns. We're also now testing our medium-risk strategy, which will trade on the crypto spot markets and is in the final stages of testing. This will be able to achieve an average of 2 to 3x returns per year with fewer drawdowns. We're going to have 2 revenue streams. The first is a 15% performance fee on profits, which is deducted automatically on a 6 monthly basis or when the customer makes a withdrawal. We're so confident in our underlying tech and our ability to keep improving it that if our customers don't win, we actually don't charge them anything. The second revenue stream is a referral fee that we've negotiated with our exchange partners. This is not performance related and will cover our running costs even in the event of a temporary dip in performance. The competitor landscape is young and it's pretty fragmented. In fact, you may not recognize any of the competitors that we've listed here. That's because there truly is no dominant or even big player in this space yet, and nobody else is able to offer what Picala does, a highly sophisticated investment approach that is extremely easy to use. This puts us in a great position to own this growing market going forward. To get there, we need to build a strong reputation. So we'll start by marketing to people like Daniel's friend, the casual crypto traders who've already dabbled in crypto and are talking about crypto to their non-crypto friends.
Thank you very much for the presentation. As we heard during the presentation, you, Aldo, have been spending a few years already developing this. Can you tell us a little bit about the origin story behind this?
Yeah, of course. So to be honest, I never thought I would end up working on finance. Back then I was more doing research in applied mathematics to different fields, from genetics to neuroscience. And I was working in particular in a scientific article about the mathematical similarities between brain patterns and financial patterns. And then I got this idea of a potential way to forecast the market in the short term. At first I thought it was a bit crazy because most people in the quantitative finance world, probably like half of them, believe that markets are essentially random, that there's no predictability at all. But I really thought there was something I could crack, and I don't know, I got a bit obsessed by this idea. And I was working on this for a long time, a few years, until I got something that looked a bit solid. And I took a leap of faith, so I decided to invest pretty much all my savings at some point. And it ended up being a great idea because I was able to live off the profits of this. And then my friends and family, they saw it worked and they wanted to be part of it too. They invested some money. And that's when I got the idea that it felt natural to try to make a product out of this for retail investors. And so that's when I decided to join Antler. I wanted to have like support and a team, and that's how I met my co-founding team, Laura and JJ.
Okay, great segue. Talking a little bit about the team, what makes this team really work?
I think the first thing that, together we have 16 years, a combined 16 years of trading experience. So we have unique insights into our users' needs because essentially we've been there ourselves. JJ has, bought Bitcoin when it was at $13, sold it when it was at 100, thinking it will never go higher. I have a similar story with Ethereum. And so we've had many, through the years, many stressful days, sleepless nights, emotional decisions as we go onto the crypto roller coaster. So we've made a lot of mistakes ourselves and we've learned from them, and that's really why we're passionate about paving an easier way forward for others to get into crypto. I think the other thing is that when we joined Antler, our passion for crypto trading, I think, is what brought us together. But then really what solidified us as a team is our personal values and our shared purpose of making crypto and algorithmic trading accessible, because we really see crypto as an equalizer and as a great way to achieve financial freedom. And I think one of the other things as well is that the three of us are experienced operators. Aldo is a repeat founder and he spent years developing the tech. JJ, has worked for over 10 years in policy, consulting, crisis management, in highly regulated industries such as banking and gaming, which comes really handy when dealing with crypto regulations. And myself, I have over 12 years of experience working in marketing, sales, and operations in multinational companies and also tech startups, one of which was actually a crypto exchange. So I think, all of that put together, that's why we believe, our shared passion for crypto plus, our very complementary skill set, as well as our diverse backgrounds really make for a very strong and sometimes fun as well team. And, the past 5 months of working together have already been great, so.
Okay, thank you. Picking up on the keyword of algorithmic trading, Aldo, can you break it down in a nutshell a little bit on how the tech that you've developed over years works?
Sure. So at a very high level, we can say that there are two layers to the algorithm. The first layer is all about forecasting and prediction, and the second is about the execution. So going back to the first one, it's probably like at the core of it. It really, the goal of this one is to take small fluctuations in prices and predict whether they will be amplified and become like a large trend. So it takes as variables like numbers that you get from the market, for instance, I don't know, trading volumes or volatility, but more importantly, for instance, the shape that prices do over time across different timescales and different assets. Then we use proprietary functions to take this raw data and turn it into numbers that make sense. This is actually my field of expertise. Then the output is this probability I mentioned of trend amplification. Now this information is broadcasted to the second layer. There is a collection of bots, thousands of them. They were all trained in very different conditions. They execute trades individually, and you can think of it, as we mentioned during the pitch, as like the virtual equivalent of an entire trading floor, managing the money of our customers 24/7. And this diversity of the bots is also very important because it gives robustness to the system. And this is an ongoing process. We are constantly improving that tech, for instance, creating bots that will be good in other type of market conditions. So this is the goal I see. My role in the near term is going to be to manage a team of scientists that will constantly enhance the system.
Thank you. Sounds super exciting. Looking forward to the journey ahead.
Thanks,
you. Thank you.
Next up is Alexander and Philip at Rendezvous. Rendezvous is a B2B solution for building and running the next generation of marketplaces. In essence, making it easy for companies to efficiently build complex marketplaces.
Hello everybody, my name is Alex and we are Rendezvous. At Rendezvous we are building marketplace as a service. Before we start, let's see some market sizes. B2B marketplaces, including online and offline, are estimated to the value of 16 trillion in US only. On the private and public marketplace unicorn side, it's a 5 trillion of the value, which was doubled in the last 2 years. On the investment side, VCs have introduced around 30 billion in marketplaces only in the first 3 months of this year. And on the top of everything, every third startup being formed nowadays ends up being some kind of marketplace or matching platform. Building marketplace is a hard business. We know it at Rendezvous. My co-founder, Philip, and I built 5 marketplaces and always had to go through the same journey of pain. First 6 months, an average business will spend on building just a fragile prototype that would highly likely be thrown away. After that, there is a series of long and heavy iterations of development in order to validate the product, to show it to the customers, to seduce them, to get to the market, really. And finally, when you reach the scaling point, there is completely another front that will be opened there. It's a technical front with the scalability. You will have to deal with your infrastructure more often than not, having to renew it completely. You will have to keep hiring people, extending your team, extending the code base, quite chaotic situation, which is very costly and time intensive. This can be done better, and we know how. That's why we are building a marketplace as a service, a platform that makes it easy for companies to efficiently build, scale, and run complex marketplaces. How does it work? First, we are offering a back office tool, which is a no-code tool made for business people to start creating their marketplace from the scratch. The basic configuration can be done in a matter of hours or days in a really enjoyable way. Then comes the front end, a production-ready UI application which will make your marketplace visible to the world, which you will have the option to validate it, to try it, to iterate, and to make it perfect. And finally, when it comes to the growth, there is a backend. This application will work on two fronts. First of all, it will bring the scalability to your system so that you never have to think about scalability. And the second, it will open its generous API in order to extend your system, to create new front ends, to create new applications, new plugins, and whatever you need. Let's understand this a little bit better in a use case. An average successful marketplace of type of Airbnb, for example, can do it from the scratch or using Rendezvous. Let's start from the scratch. It will take around 6 months only to build a paper prototype, which would probably be thrown away. Instead of that, with Rendezvous, you would use 2 days or even less to create not only the front end, but also the back end to support it. In the second stage, this development cycle iterations, you will spend a lot of time building the both front end and back end. While using the Rendezvous, you can fully focus on the front end, being relaxed because back end is already scalable. And finally, when it comes to the scaling, instead of this terrible battle on two fronts with the infrastructure and with new features, you will just be able to focus on your functionality, on your business needs, and create such a cool features like, for example, Airbnb. Is there any other alternative to building marketplaces than started from the scratch? Yes, actually they are, and we will take a look at two types of offers for marketplace builders. First of all, there are no-code tools like Webflow or ShareTribe, which are really cool because they're easy to use, are easy to create in the first version, but they suffer from a terrible problem. They do not scale. On the other side, enterprise tools run by big players like Miracle or Hybris are there with a really full scalability mode, but they're consultancy-heavy projects which take years and millions of euros and also many people involved. So they're not affordable for most of the companies. Rendezvous not only merges the strengths of both of those approaches, but also pushes the whole feature level to the next level, adding the option to add additional participants to create complex and customized process without incurring any technical debt. We see the next Uber and Airbnb running on Rendezvous. In order to achieve it, we are currently focused on the small marketplaces in pre-MVP and MVP stage in order to push them up and make them launch. Then we'll shift the focus towards SME stage and a little bit advanced marketplaces with new integrations and new features to finally land on the territory of B2B enterprise, which is our ultimate market. But first thing first, so let's zoom into the first step. As told, currently we are already talking to developers and CTOs who know what does it mean to build something from the scratch and reinvent the wheel. We are talking to CEOs and product managers who want to launch the marketplace without actually locking into the solution that will not scale. And finally, there are software companies, software developers which have access to SMEs and will open us a completely new channel when we grow. Our pricing model is following the whole approach. It's pay-as-you-grow based model, also based on subscriptions, where each level is carefully designed to cover the needs of marketplace in different stages. So there is a basic subscription level, plus upsales in terms of revenue share, transaction fee, integration fee, and similar. We are proud to have launched our first closed beta version a couple of days ago, and serving our 2 early adopters, making our product ready for the real launch in 2 months. Then we will have 5 customers, and we will have the first revenue early next year. This is the team to execute this. We have 2 co-founders. Both of us are tech. We have accumulated more than 30 years of experience in developing software and also building marketplaces. We also had traditional businesses and a successful marketplace Penta. We are backed up with a small but skilled and competent team consisting of consultants in a product line and business line, 2 developers and QA, plus operations. Thank you very much and welcome to the Platform Revolution.
This is really exciting, Alex. Thank you. I can really see how this can make building a marketplace so much easier. How far do you think this can actually go?
Well, it can go very far. If you remember the first slide, it's a trillion marketplace when it comes to the B2B. And if we start earlier from the MVP marketplaces, we basically focus on the money the companies spend on tech and calculate our space, our market space actually through these values. If we take this and have 1 year cohort of marketplaces being founded, it's around several thousands of companies. Some of them will reach MVP, and on that journey they will use around $500 million of money, which is our immediate market. After that, the companies that will continue growing, before they reach IPO and 30 million spent in tech, they will actually accumulate another 2 billion of money spent in building their marketplace, which we definitely see as our market.
Philip, marketplaces have been around for a very long time, right? Why is now the time to build a platform to make this easier, and how is this different from what already exists out there?
Yeah, thanks, Alan. Well, we think that Shopify for marketplaces is long overdue. The marketplace builder today are standing where e-merchants were standing before Shopify, but on top, building a marketplace is way more harder, because you have to solve your demand and supply, start just to kickstart your business, and later you're going to probably add another network effect and the new features which you don't have on an online shop. We think, and we tested, and we have experience with existing solutions, and the most important one, we are talking and we talk to marketplace owners and to marketplace builders, and what they're saying us that the existing solutions are not flexible enough, or they do not scale enough, or you need at least $1.5 million just to launch your marketplace. And we think we can do it better, because if you take an example, one of the competitors, they're awesome, you can start, but you can only build the most basic standardized process, you cannot change anything. On the other side, tools like Bubble, they're also pretty awesome, but only for prototyping, no more. You can do your fast prototype, it's fast, but you cannot run your business, you cannot operate on it. And we are building a cloud infrastructure for marketplaces for the future, which cuts down development time and development cost and speeds up time to market.
So, Alex, you mentioned some pretty big numbers earlier. And there's obviously a lot of marketplaces out there, but who do you really think is kind of that ideal initial customer?
Ideal initial customer. Okay, I would start with our ideal ultimate customer, which is this huge trillion valued B2B space. But in order to get there, as explained during the pitch, we have to do our homework and traverse all this journey. So initial customer of us would be a service-based, pre-MVP and MVP staged marketplace. Service-based simply because they're very underserved comparing to product-based marketplaces, which are hanging around for years by now. Service marketplaces like Uber or Helpling or Airbnb are quite new, and we see our potential here completely due to our flexibility, our customizable processes, and all the extensions that we can give to our users. So that would be definitely our first market.
Thank you.
You're welcome.
Next up is Hey Lama. Hey Lama is on a mission to radically improve language learning by really empowering the tutor-student relationship before, during, and after classes using technology. Shirzad has a background in product management and language technology, paired with Dan, who has a significant experience in machine learning and data science. Together they speak more than 10 languages and are ready to revolutionize the way people learn languages.
Hi, my name is Shirzad. I'm CEO of Hey Lama. At Hey Lama, we're on a mission to reimagine how people learn languages with private tutors online. We're a team of avid language learners, and we've been learning languages our entire lives. Just like most of you, we start learning languages with mobile apps, but as we cover the basics and start needing something more effective, we experimented with a bunch of solutions out there and eventually became convinced that private tutoring is hands down the best method of learning languages. We tried marketplaces out there to find our tutors and observed that most of the marketplaces pay little to no attention to what happens after matchmaking. And that creates a bunch of problems. Tutors have to use business productivity tools to organize their lessons, and these tools are not meant or designed for teaching. And students, in turn, have to struggle with PDFs and with non-interactive, non-responsive content, and the challenge of practicing all that content between the sessions. The entire experience is full of frictions and not pleasant. And that's not just our problem. There are millions of language learners out there, and a growing number of them are choosing tutoring as their way of learning languages. But that doesn't have to be the case. What if we bring language tutors, language learners, and cutting-edge technology together and rethink and reimagine the entire experience? Introducing Hey Lama, a global one-stop platform for language learners who want to learn languages with tutors. Hey Lama rethinks the entire experience from the moment students and tutors meet to the moment learners achieve their language goals. We are rolling out our platform in 2 phases. We already launched our MVP, the Teaching and Learning Digital Toolkit for both sides. And we will leverage the traction to launch our marketplace early next year. Our MVP is live, so let me show you a few ways we're already enhancing the tutor-student relationship today. We enable tutors and students to collaborate in real time, exchange lesson material, take notes, create flashcards, or do grammar exercises. Everything is possible from a single place. We empower tutors through productivity and automation features. Now they can save time while focusing on their students. Everything they need is always available for them in just a few clicks. Students, in turn, can focus on learning and not juggle around multiple tools and look for third-party apps and engage in copy-pasting. Everything is there whenever they need it between the classes. And most importantly, we equip both sides with data and insights that help them personalize the experience and cater and adapt the learning process to the individual needs of each student. The market response for our MVP was great. We already have more than 50 tutors and more than 200 of their students testing the product, and all of that with zero marketing budget. We're doing and running quick and rapid experiments, and in parallel we're also building our waitlist, which already has more than 50 tutors and nearly 2,000 students on it. So we're excited to bring all of them on board in the next weeks. Hey Lama will be like a magnet for the best tutors. Just like other platforms, we will enable them to make money online. Unlike other solutions, they will have access to productivity features and automation to save time. They will be able to understand their students like they cannot do anywhere else. Having motivated, engaged, and caring tutors will help us get students who will want to find their perfect tutor. They will come for the flexibility that private tutoring offers, but stay because of the seamless experience that they have. Everything they want, all the practicing they want, will be available to them wherever they want it, on mobile or web. And they will also be able to measure and visualize every inch of their progress. We have achieved a lot in the last 3 months. We have launched multiple products, have run dozens of experiments, and validated that what we have excites both tutors and students. Next, we will be onboarding aggressively more tutors and students, and we'll leverage that traction to launch our marketplace early next year. Let's talk about positioning. We believe that it's our hybrid approach of keeping tutor at the heart of our method, but augmenting the experience with technology, our scalable approach to content, and our focus on end-to-end that set us apart from everybody else in the market. Yet, it's our data strategy that will help us build the deepest moat over time. Already today, we're tracking and storing every interaction on our platform, granularly and in a structured way. Over time, we will use that data to predict and answer questions which cannot be answered today. What is the precise level of the student? What tutor fits the student the best? What is the next best word or grammar concept to learn for that student? We are thrilled to bring that future about. Let's talk about the revenue model. Our revenue model is based on transactions. We will charge 20% from each lesson booked on our platform. This is in line with the industry averages, but we will be giving much more to our tutors and students. This model has been validated with our tutors already. If we look at the market, it's a huge and rapidly expanding market. Only the digital language learning segment will triple in the next 3-4 years. And our conservative bottom-up analysis shows that we will be able to secure north of 200 million GMV already within the 5 years of our operation. This opportunity is huge, and solving these pain points offers a great business opportunity. And we believe that we are the right team to capture it. Not only do we bring 30 years of combined hands-on experience across business, technology, design, product, and growth, we're passionate about the problem. We speak more than 10 languages, we have backgrounds in linguistics, we've built cutting-edge language technology, we've written books about language learning and grown language learning communities. We're uniquely positioned and qualified to solve this problem. If our vision and our story resonates with you, we'd love to meet you. Thank you very much for your attention, and this was Team Hey Lama.
Thank you, Trezor. That sounds really exciting. When I think about technology for language learning, obviously the first thing that comes to mind are apps such as Duolingo. Why would I, as a language learner, choose Hey Lama as opposed to something such as Duolingo?
Right. If you look at the user journey, you will actually, it becomes pretty obvious that we are in different segments and we are not actually competing against each other. Let me illustrate this, right? So when you just want to start learning languages, it makes sense that you start learning with a mobile app because it's just easy. You pull out your phone, you download Duolingo, you can start learning languages immediately from the comfort of your sofa. But then what if you need to pass a test or enter a university or get a job or relocate to another country? All these use cases require a way more effective way of learning languages, actually something that will help you develop your speaking confidence and listening comprehension and more, right? In this case, you eventually grow out of mobile apps and you need a more effective way of learning. And this is exactly where we meet and greet our users. So from the user journey perspective, Duolingo and other apps are more like upstream, and we're more downstream and more catering to the needs, special needs of the more dedicated learners who have some concrete goals to achieve.
And on the tutor side, there's other platforms that also offer some elements of lesson management, etc. You already have some first tutors and they keep coming back. Why do they keep coming back to your platform?
They're just excited. So when I talk to some of our tutors, I jokingly say that we're turning them into Iron Man. So let me tell you about one of the tutors. So Slava is a Russian language tutor, super excited, super motivated tutor, really cares for the success of his students. So his workflow is very complex. For example, to keep track of the notes about his students, like their interests, goals, he has to keep multiple Excel files. And then he has tons of Google Docs and Microsoft Word files to arrange his learning material. He has to export that into PDF and share it with his students. Now also imagine the experience of the students, right? When we brought him to Hey Lama, when he tried it for the first time, he was so excited that all his jobs, all his tasks were so elegantly solved in a single solution. So that's what keeps him bringing back, because we're not just solving some of his tasks, we're looking at it end to end, also about the success of his students. So that's what keeps him excited. He understands that we're empowering him, we're empowering his students, and only if they both are successful, we at Hey Lama is also successful. So that resonates with the tutors and they just keep coming back.
Can you tell us a little bit about more your immediate plans, both on the product side and as you're going to market?
Right. So our promise to tutors and students is that once they discover Hey Lama, they will have such a seamless and personalized and efficient way of learning languages like they cannot experience anywhere else, right? And we wanted to bring that experience as soon as possible. So that's why we started with the software layer, with this learning and teaching toolkit, which we call learning management system internally. And we launched it to validate, and we actually have validated that this tool excites our tutors and students, right? So we have a lot of tutors using it, and we're getting positive feedback on a daily basis. Now, we will leverage this traction, and as a result, we're building the supply side to connect the demand side and launch a marketplace early next year. So that's the plan. First, we validated that we have something that excites everyone, and now we will leverage that to have marketplace, which is essentially about finding the tutor and booking the lesson and the payment system. And altogether, that will position us very strongly compared to other marketplaces.
Super exciting. Thank you.
The next company combines the winning formula of social media with people's inner drive to learn. It enables people to gain knowledge in as little as 1 minute while really having fun. With Andrea's content creation experience and Rahul's software engineering and machine learning capabilities, they really are a powerful duo, replacing some of our social media screen time with just as entertaining but educational content. Over to you, Andrea at Insightful.
Humans are curious creatures with an inner drive to learn. The problem is that acquiring knowledge has become harder than ever. Everybody wants to be the smartest version of themselves, but information overload makes it hard to tell what's important and what's not. Short attention spans make it hard for people to sit through entire educational content pieces, whether it's audiobooks, podcasts, or articles. Engagement expectations are through the roof, mainly led by social media, making it hard for educational content to compete. And lastly, due to the very nature of educational content, it is hard for one to see progress and to keep themselves motivated in the process. Therefore, those 4 hurdles make it harder than ever for people to acquire new knowledge. And the result is that people spend countless hours wasting time on social media and feeling bad about themselves, wishing they could have used the time more constructively. This is why we need a platform that can make knowledge more appealing for the users again. Well, ladies and gentlemen, that is exactly what we did. Introducing Insightful. Feed your curiosity. Insightful is an app that makes acquiring knowledge fun and easy, solving the 4 challenges highlighted previously. How? Providing personalized content, only the content that's most relevant to you. Providing bite-sized videos of only 1 to 3 minutes, enabling even the people with the shortest attention spans to learn something new on our app. Introducing Edutainment. We work with the world's most engaging content creators to provide content that's both engaging as well as educational. And lastly, adding a layer of gamification, rewarding people for their efforts, enabling them to track their progress and to benchmark with their friends, enabling them to stay motivated through the process. Together, thanks to those 4 features, we enable our users to learn something new in as little as 1 minute while enjoying themselves. But let's see how this works. Users, people like you and I, log into our app and register their interests. After doing so, they get access to a personalized feed showing them only the videos that resonate with them the most. Fun, bite-sized, educational videos. Our machine learns from your behavior, tracks your progress. It tells you how many minutes you're investing into learning something new. It gives you rewards for your streaks, and it even builds knowledge heat maps, enabling you to know which areas you're building your expertise into, and perhaps even helping you find your passion and your future hobbies. By doing so, we effectively combine the successful content format of social media with people's inner drive to learn new things, making learning something new easier and more appealing. We've been building this product for the past 2 months. The closed alpha is already available on both Android and iOS, and we're on track to release the open beta that all of you can download by mid-October. We've garnered the support of creators with over 20 million followers who just can't wait to release their content on our app. We built a team of over 10 people with advisors from Uber, Asana Rebel, and YouTube, and we're actively fundraising and expecting to close our seed round by the end of January. But why? Why is it now the right time to invest into such a product? And why was exactly the most searched keyword on Google in 2020? Crazy things are happening in the world, and people want to know why they're happening. They want to get educated and formulate their own opinion, and that's what we help them do. Moreover, we've seen an incredible spike in subscription video on demand, signaling that people are willing to pay for video on demand as long as it provides them the content that they're after. And lastly, we've seen the creator economy double in size in recent years. And this is important for us for 2 reasons. Firstly, creators have become increasingly trusted by their audience, and education is no exception. And secondly, the power is slowly shifting from the hands of Google and Facebook to the hands of those creators, the people who have the keys and the trust to the audience that we're after. So successful businesses of the future are those that can combine their interests with those of the creators. And that is exactly what we did. We put creators at the core of our business model. Let me explain how that works. Content creators create videos and submit it on our platform. Then they turn to their existing audience on social media and tell them that their most insightful videos, along with those of many other clever creators, can now be found there. By doing so, they drive traffic and conversions for our app, and in return, earn a commission for their efforts. But it's not over, because they're also incentivized to produce ever fresher, more engaging, and more informational videos for us. How, you might ask? By means of royalties. We set aside a percentage of our revenues and distribute it among creators based on what percentage of watch time can be attributed to them versus total platform watch time. By doing so, we effectively decrease two of the major cost drivers for businesses like ours. Firstly, we don't have to pay for content up front, decreasing the risk of paying for content that doesn't perform. And secondly, we decrease the customer acquisition costs, decreasing our reliance on platforms like Google and Facebook. And this sounds great for business, but what do creators think about it? Well, over the last 2 months, we've talked to many of them and they love it. As a matter of fact, creators with over 20 million followers just can't wait for us to launch our platform. Why, you might ask? Well, two simple reasons. Because we provide superior monetization and because they believe in the mission that we're after. And this creates humongous market opportunities for us. We've analyzed the data and we've realized that with this app, we can create yearly revenues of over 500 million euros. And this belongs to the global online entertainment market, which is growing at lightning fast speed. But what are competitors doing? Aren't there competitors in the area? Well, of course they are, but competitors follow a different strategy, leaving us an area of opportunity which we have identified and are ready to leverage. Allow me to explain. On the bottom side of this graph, we have the more educational players, which are very successful, but they focus heavily on knowledge transfer, foregoing opportunities for increasing engagement with their audience. On the left-hand side of the graph, we have the more long-format players, which are also very successful, but they fail to cater to users with short attention spans. So we've identified at least two user needs, which are currently unmet and underserved. And we're ready to leverage this area and this opportunity. But why should you trust us with this mission? Well, that's because we're a team with a passion for building and with all the complementary skills to make this happen. I come with experience in subscription apps and content creation, whereas Raul comes with 15 years of software engineering and machine learning experience. Moreover, we have world-class advisors. Giovanni from Uber is helping us with growth hacking techniques, whereas James from YouTube is helping us with platform optimization and creator acquisition. We've already received investment from Antler. We have launched our closed alpha and we're on track to release our open beta in a matter of weeks. And monetization is just around the corner, waiting for us in Q1 of next year. This is bound to be a very exciting journey. So join Insightful and start feeding your curiosity today.
So I've actually been amongst the lucky alpha users for the past couple of weeks, so I know what's on your platform. But for everyone who hasn't been as lucky, what's on the platform and how is it different from others?
That's such an interesting question that comes our way so often. We cater to human curiosity. On Insightful, you learn about the world that surrounds us, the history of where we come from, the science of the world that we live in, the social science behind it, the economics of our survival, the politics of the society that we live in. We combine curiosity-driven educational content with entertainment. But the moment I say that, you might be thinking, well, that seems rather niche. Just think of the super success of platforms like Masterclass and CuriosityStream. That shows that there is a huge demand for constructive content like that, served with an element of entertainment. But they are still long-form content. And you, me, and most of us still have a problem called lack of time. That's where the bite-sized nature of content becomes important. The amount of time it will take you to decide on what to watch on other platforms, you will end up learning something new and insightful by then. That's how Insightful is different.
Okay, and how does that actually translate then into the business model that's behind it? How does it actually earn?
So our business model is very simple. We're all accustomed to having downloaded apps on our phone, and ours is no different. So there is a freemium version where a user can come in, create a free account, and get access to a limited amount of content. And that's just enough to get a sense of the value that we can create for the user. Then if such user wants to continue and explore further, they have to pay a subscription, which is very important for us for two reasons, right? Effectively, on one hand, to reward creators for the effort put into creating the content, but also to give creators an incentive, a commission for bringing their users from other platforms onto our platform. And this is a very interesting mechanism because their users are already incentivized and looking for educational platforms that provide them something like this, something that combines education with entertainment, with a little bit of fun. So effectively, we're just providing them with a platform that they're looking for, one that can give them discoverability, curation, and a bit of gamification. And also, this is a sort of self-reinforcing cycle, because the more users come on board, the bigger is the economic incentive for creators to also create content for our platform. And the more creators join, the more content we have, the more value we can create for users. And this is sort of the flywheel effect that we've purposely built into our business and is our key for success going forward.
Okay, and from a tech perspective, how does the product actually work? What's behind it?
So there are two primary capabilities that the product benefits from. There is the recommendation algorithm, and then there is gamification. The recommendation algorithm learns from your usage patterns and combines that with the preferences that the user onboards with. That lets the algorithm to serve you the most relevant content for you. But at the same time, it consciously adds a small amount of long tail content, the kind of content a user won't normally explore on their own, but once they get acquainted with, it expands their horizons. And then on the other hand, there is the meaningful gamification. Things like tracking, streaks, XP points, creating a sense of accomplishment for the user. And that's how Insightful delivers value to its user.
Thank you, Raul. Thank you, Andrea. Pleasure having you. So thanks for joining us today. We hope you've enjoyed the presentations. If you want to get in touch with any of the portfolio companies, please just scroll down and click Get in Touch, or swing by our office here in Berlin and meet us and the portfolio there.